Good morning, everybody. Mike Vacchi, PrincetonTrader.com, here for NTMarkets.com with your Wednesday morning pre-market webcast. Okay, S&P 500 E-mini futures daily chart, and we've got the 2014 high up here. Then we went and did a lower band ride for 5 days. Arguably took a day off, then 2 more days. So effectively an 8-day band ride. We bounced off the move down to the gray line here, which is the third standard deviation band. We bounced back to the 50-day exponential moving average, which we outlined in the subscriber webcast that I put out on the web page. That was the one from Sunday night when we were bouncing and we were looking at various scenarios with respect to where things might end. They ended at our first scenario, the 50-day exponential moving average. The 50-day was confirmed. Remember, it was resistance here, confirmed resistance here, and then yesterday the bears pushed lower. We failed at the 52 area, which was the our proprietary upper level was 52.25. The weekly pivot that we used was 52.10, so it was a very nice fail level for us. And we went back through our lower level at 36, and then did one of our very nice setups off of the failure at 36. Traded down into the 25 area. What we're seeing now is a little bit of a bounce. Whether that bounce turns into a rally remains to be seen, but I am still in the camp of 100% sell rallies mode. This is a sell rallies market. You need a rally to sell a rally. So there's going to be bounces along the way, and that's what we've seen. You saw 1918 up to 71. That's a significant bounce. You can't say the market isn't bouncing. It bounced for 53 handles. But those bounces are being sold. We didn't even get to the middle band on that one. The 50-day exponential moving average gave us our answer. So where do we go from here? I expect to see new lows this week. I expect to ride the lower band at least for another day or two. I exited the runner on my short yesterday afternoon, and there was a couple reasons for that. It was a very nice winner from up at 62.5, and that was number one. Number two is I want to get kind of in tune with the market. So I'm going to look for, we're going to see what kind of a bounce this is, and then we're going to go ahead and, I have every intention of just putting a brand new short right back on. And my target would be a move below 18. The question is from where. So I'm currently flat. I'm going to take a fresh look at the market today when we open up and see where the opportunities are. Where we are longer term is you're starting to see the 200-day exponential moving average become involved with the chart. It's down at 1897.85. Not that long far away, considering we were up at 71 2 days ago. So as we progress, the 200-day exponential moving average is going to become significant. Recall that the Russell has already confirmed the 200-day exponential moving average as resistance. It's below that area. It's been confirmed as resistance. It's continuing to make lower highs. And frankly, it's a very ugly chart. Last thing I'll show you with respect to the sell rallies environment is this. This is a 5-minute chart that outlines basically yesterday's regular session. The red line here is the regular open. Okay, we made a little dip, 39.75. We came up here to these two lines. This is our upper level and the weekly pivot. We failed at that area, which is a very nice setup for our folks. And then we continued to trade down, and we made essentially matching lows at 1940. In 2013 and the early part of 2014, those matching lows would have acted as a floor and would have springboarded us to new highs on the day and likely would have ground out all the way into the close to the upside. What we saw instead was a series of lower highs. Lower high, lower high, lower high, that finally gave way down to our lower level, which is at 36. It based there for a while, and then it finally cracked, which gave us a nice little setup into the afternoon. We made our bias, we retested our level within a tick, so that's your short entry, stop up above, and we failed to the tune of about 10 to 12 handles. So a couple of very nice setups for us in the room yesterday, and we'll see what today brings. But the point I'm trying to make is sell rallies. Need a rally in order to sell a rally, but if you're buying these things, it has to be with a mind towards where is this going to stop so I can take my money on the long side and either get out of the way if you don't like to short or find a place to go ahead and get short for another lower low. Okay, everybody have a good one. Follow us on Twitter at Princeton Trader. Check out the website, princetontrader.com, and by all means, come check out the chat room. We're getting floods of new trials every day. It's very exciting. You'll be learning with a lot of people. It's just a great group, and when people get in there, they really love it. So come check it out. I will be back tomorrow morning with another webcast. Trade them well.